about 30 or 40, more than 40% if you don't include companies like Hapsik.
Excluding the most recent adjustment to the index.
So wow, Alex, it's you again. Last week we talked about Chinese stocks, and the week before is dividend yield stocks. Now we're looking at the region as a whole. You spoke to BlackRock lead strategist Jonathan, and he says the sun is shining on Asia again. Are you convinced? Are we actually convinced that the fund flows are coming back to Asia and we will see more liquidity in the region?
Yes, if you look at the statistics that we got, funds are definitely flowing back into Asia again. If you look at the MSCI Asia excluding Japan, the index is up by more than 20% since the low in January. Yeah.
So you also spoke to this guy, Pacific Mutual, Tay. He told us about some of the strategies to invest in the region. What are the things that he said?
Well, he said that because of the accommodative monetary policy by the world's major central banks, so there are a lot of ample liquidity in the market now. So that is a positive things for equity market.
So when you look at only the region itself, Asia region, we saw Jakarta has gone up quite a bit, and also SCT, Thailand index. But the thing is, KLCI is still one of the worst performers in the region. What are the reasons other than the still low oil prices?
Other than the macroeconomics, because of the low crude oil prices, the other reasons are probably because of the expensive valuations relative to other markets such as Indonesia and Thailand. The other thing is because of the strong local ownerships by various government-linked investment companies. So they say there are less mispricing opportunity for foreign funds to capitalize in this market.
But are we going to see more opportunity, more foreign funds, fund managers buying into KLCI?
If earnings recover, yeah, they will probably come back. Given the upcoming national budgets, so that probably will boost up the local market as well.
Now, compared to countries like Japan and also Korea and also Taiwan, Malaysia, more than 90% of our local investment fund like EPF and Quap, they put their money in the domestic market as compared with 50% in Japan. So do you think it's a wise idea for them to put all the eggs into one basket?
Well, it's always wise to diversify your holding to reduce your risk. I think some of the government-linked investment companies, they are already aware of this fact. Like EPF and Quad, they have been trying to diversify their investment into overseas market. Yeah, recently we saw that Uber buying into Uber.
Quad buying into Uber.
Quad buying into Uber.
It was just last week. Yeah, it was just
yes.
last week. But the thing is, right, looking at a lot of foreign funds going back into this region, I think it's also very difficult for them to diversify at this point of time, especially when the government is urging them to bring the money back to the domestic market, to pump up the infrastructure and all that in this country. So they need to find a balance in between diversifying the assets and also putting money into the domestic market, right?
Yes.
Anyway, when we look at what KLCI as a whole, the corporate earnings are still pretty bad. And are things really looking up this time?
Well, we can always be hopeful of a earning recover by end of this year or probably 2017 because of the GST, right? So corporate earnings are squeezed by the increased operating costs. So it has been more than 1 year since the implementations of GST. So we can definitely be hopeful of an earning recovery. We can hope that the consumers are definitely have adjusted to the new higher cost environment.
And in the story, you also mentioned about budget 2017. It will be tabled soon in October next month. And what are the things that the fund managers say that we can hope for in this budget 2017?
Basically, they kind of say that it could be a people-friendly budget because people view it as a pre-elections budget. So there could be more gift-ups, and that could boost consumer spending. So in the region, in that sense, it could boost the economy.
So Ang also talked about the downside risk for KLCI and also for the region. So apart from Trump probably getting elected by the end of this year, because America is one of our major trade partner, so probably some of the policies will be changed. But other than that, what are the things that we see that would actually cause some downside risks for KLCI?
According to Ang, downside risk is quite limited because of the national budget and then as well as the government increased effort to stabilize the market. So if earnings really recover and foreign funds are coming back into Malaysia again, so there could be some upside risk. So you see the upside risk outweighing the downside risk. So it's probably a good time to long the equities. Yeah.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.